Okay, great, you guys. Well, you guys have had a long day. It's almost done. I'm second to last, and hopefully it's going to be I think I've got a really good presentation here for you today that you'll be able to take some good things away from. So um, you're going to want a pad of paper and a pen. There's going to be several things here that you're going to want to write down, but I just want to remind you all that nothing that we're talking about, we will talk about trades today. Nothing we're talking about today is a recommendation to buy or sell any security. You've heard this all throughout the session this afternoon, and to just make sure that you understand the risks involved. I'm not quite sure. Let's see. Okay, I've got the chat now. I just want to make sure if you guys have questions along the way, feel free to chime in. But first of all, my goal is threefold. Number one, my background is systems and hedge fund development. And we started a hedge fund back in 2010, Ren Capital Management. And so I want to share with you today some of the things that we do in the hedge fund area that I think you're going to be able to instantly transfer over to anything that you're doing, whether you're trading stocks or options or ETFs or futures, Forex. It doesn't really matter. I want to share a couple of things here with you today that I think you're going to be able to instantly apply to that. The second thing I want to do is I want to share with you a system that we've developed that has done quite well. And we've actually averaged over 45% annually since 2007. And I'll show you 2008. It was one of our best years ever because of the spike in volatility, and I'll show you that in our discussion today. And then lastly, I want to share with you our monthly income system is so great because it's scalable and it's passive. It's not something you've got to sit around your computer every day or show up for an hour or 2 or 3 hours a day. I've learned that the people that really do very, very well aren't sitting around micromanaging their portfolio. They let their money go to work for them. And so I want to share with you a system that we've developed tonight that I think will help you do that. And lastly, we've developed an analytics tool. I've heard several of the presenters today talk about risk to reward ratios, and it seems like sometimes you have to be a mathematician to figure some of this stuff out. How many of you here are familiar with Michael Bloomberg? Michael Bloomberg and the Bloomberg Terminal. That's me in the chat. How many of you are familiar with Michael Bloomberg and the Bloomberg Terminal? You may have heard of him in the most recent elections, right? He, let's see here. Michael Bloomberg, Bloomberg Terminal. Anybody hear of him? Anybody hear of Michael Bloomberg? You guys know where the chat is? Maybe I don't. I think I do. So anyways, Michael Bloomberg, it used to be the mayor of New York, but he developed a terminal called the Bloomberg Terminal. And the Bloomberg Terminal is a terminal that almost every bank and hedge fund in the world uses. It's a terminal that allows them to systematize their investments. It allows them to create systems that allow them to know, we can risk this much on an investment, or we can only, we've got to look for this much reward on an investment, okay? Jimmy says he was on 60 Minutes last Sunday. And so the Bloomberg Terminal, it's a must-have in the hedge fund and the banking world, because without it, you're not able to systematize your investing practices. Well, it costs around $50,000 a month. And right now, there are over 100,000 institutions throughout the world that pay for it. And so it's a necessity in the investment world. Well, this trade and risk analytics tool, it's not quite the Bloomberg Terminal, but it's a Monte Carlo simulator that will allow you to see, if you know your win rate and you know your reward to risk ratio and you know how much you risk per trade, then you can begin to forecast what your portfolio results will look like. If I'm only 50% right and I'm making $1.50 for every $1 that I risk, and I risk 5% per trade, I'm going to find that my portfolio is going to be quite choppy. And the problem with the investment landscape right now is we have a hard time looking past our drawdowns. I know how many of you here, have a string of losses and you begin to doubt what you're doing and wonder if it's going to work out for you. I know that all of us have. If you've been doing this for any amount of period of time, it's difficult to see past that. And that's what the Bloomberg terminal does. It allows a bank to say, hey, if the next 5 or 6 red Ford F-150s default on their loan, can we continue to issue those loans? Or are we going to pull out of this slump? And that's what the Bloomberg terminal allows a bank and hedge funds to do, is allow them to visualize past the day-to-day rotation or the day-to-day fluctuations of your investing and stick to an investment system even when it may not be performing optimally. So if you stick to the end, we're going to give you this tool today, absolutely free. We'll show you how to get that absolutely free today. So here's the truth, folks. Most stock and options traders and traders of all types have real problems consistently making monthly profits. In the next 45 minutes, we're going to show you a proven system that, number one, works in every market. It doesn't require a lot of time. By not a lot of time, we're not talking about coming and doing this daily for 1 hour or 2 hours. It literally maybe a couple of hours a month for a monthly income system. And you're going to be able to implement it immediately. But I want to ask you these questions first. Number one, how many of you in here are following a trading system right now that's giving you consistent profits? So number one, are you trading a system right now that's giving you consistent profits? If you are you satisfied with those? If you're not, what's the one challenge that you see that is a barrier to you being successful? And as you guys are typing those in, we found that these 7 different barriers are oftentimes what is holding people back. Okay, if any one of these are on your list, you're in the right place. I think we're going to be able to solve some of those here today. Okay, not maintaining trading discipline, trading without a plan, failing to adapt to the market, learning through trial and error, having unrealistic expectations. I mean, I can't tell you how many of us are just desperate and really we feel like we are just kind of backed into a corner and we really need to have explosive returns. I'm going to show you through compound interest, you don't really need to have explosive returns. You just need to be consistent. Okay, poor profit and loss management. You get out right at the wrong time. You get in right at the wrong time. And lastly, no accountability. I think that's one of the biggest things I see is a lot of us are trading alone. How many of you have gone to the floor of the exchange or been on a professional trading desk? Nobody's trading alone. It's you've got to have accountability. And if you don't, no matter what you know, you're going to find yourself gravitating back to your crocodile brain and making poor decisions. And so I'm going to share with you today some accountability practices that we use that I think will also help you become a better investor and have better profits. So let me just briefly introduce myself. My name is Nick Lovelace. This is my wife. We've got 5 kids now. We just had our 5th. I love to fish. I love to ski. We're out here in Salt Lake City, Utah, and I love to fly. I got my pilot's license when I was 16 and a half. I also we developed and started a hedge fund. We call it Ren Capital Management. It's an index options-based hedge fund. We create liquidity in the options industry. And that was created back in 2010. And also, I am the founder and head trader here at the Super Trader. So throughout my experience, I've done a lot of things right. But it's the things that I've done wrong that have been where I've learned the greatest lessons. And some of those lessons have been quite expensive. And so today, hopefully we can share you some time or save you some time and help you kind of cheat a little bit, okay? And maybe not have to repeat some of the mistakes that we've made to get to the point where we've been. So again, like I said, since 2007, we've done quite well. And 2008 was our greatest year. And I'm going to share with you how we were able to do that here throughout this presentation. We're going to walk through that. But let me just ask you a question. go ahead and get out a piece of paper and a pen, and you're going to write these things down. We're short on time, so I'm going to skip some things. Get out a piece of paper and a pen. I'm going to have you write a couple of these things down. I'm going to share with you 3 things that we use in the professional atmosphere, in the hedge fund industry, that I think will instantly make you more profitable. The first one is, number 1, you've got to create a trading plan. This sounds simple, but it's something that we found that a lot of people just don't have, and I'm going to create one with you here today. The second thing is you need to follow your trading plan. How many of us have a plan but have a difficult time actually following it when it comes time to execute? And number 3, you've got to have a co-pilot. So secret number 1, creating a trading plan. What does a successful trading plan look like? We have we invest in small businesses as well. We just do some like Shark Tank stuff, a group of investors and myself. And several years ago, back in 2000 and it was around 13, we had a group come before us. They're called Life Elevated Rentals. They rent recreational equipment like jet skis and 4-wheelers and boats and RVs and things like that. And this was their business plan. It had plans basically for every aspect of their business, and they presented their plan to us, and were seeking investment capital. And so, how many of you think a trading plan should look like this? What does a successful trading plan look like? Hopefully yours doesn't look like this. If it does, I think you're probably missing the mark, okay? We found that an investment plan, a trading plan, should include 3 things, okay? The first thing that it should include is, number 1, it should measure your win rate. You should have a target win rate. The second thing that it should target is it should target your risk to reward ratio, okay? So let's just go through an example here of a win rate. So when we trade for monthly income, we generally are going to shoot for a higher win rate. Okay, for those of you, how many have heard of the Turtles? The Turtles were some of the greatest independent investors that we know of. They had a very, very low win rate. In fact, in most situations, they were right only 20 to 30% of the time. Okay, so I don't really care what your win rate is, but when you're trading for monthly income, generally we want a high level of certainty that we're going to get paid each month, right? Most of the time we aren't satisfied with sporadic income from month to month. And so most of the time when we're creating a trading plan for monthly income, we're going to want to create something that is based around a higher win rate. Now, most of you, most retail traders, most of us, we want to be right often. But I'm here to tell you that it doesn't really matter what your win rate is if you can balance your reward to risk ratio with it. And I'll show you why here in just a moment. But for this example, for monthly income, we do want to target a little bit of a higher win rate, right? And so I'm going to just use our results from 2016, and we're just going to calculate our win rate. So on the left, we've got our winners. On the right, we've got our losers. And we had 12 profitable trades last year for our monthly income system and 3 losers. So to calculate our win rate, we take our total losers, or our total winners, divided by our total trades. So we're going to do 12 divided by 15, and that's going to give us an 80% win rate, okay, an 80% win rate. Now, I always ask people, is that good or bad? Is that good or bad? And most of the time I'll get answers like, that's great, that's great. You're right 8 out of 10 times. I gotta say, we don't really know. That's not enough information, folks. We don't really know if that's good or bad. And this is why, folks. If we come in here and we plug this 80% win rate into our analytics tool, it really, we don't know. That's not enough information. We still have to track something else, and that's our reward to risk ratio. We have to know what the reward to risk ratio is of our trading system, and that's the second thing that you have to define. Okay, the second thing you have to define in your trading plan is what is your reward to risk ratio. So we'll just use our results from last year to do that. So on the left, we've got our winners. On the right, we've got our losers. And to calculate your reward to risk ratio, you basically sum up all of your profits and divide it by the total number of winners. Okay, so we're going to sum up all of our profits and divide it by our total number of winners. So we have $63,300 of profits, and this is just using a model portfolio that we use with our members. We start at $100,000 every year. Okay, so we'll take our sum of our profits divided by the total number of winners, and that's going to give us an average reward of $5,275. $5,275. And then the second step to this is calculating our average loss. So we're going to take we're going to sum up our losses, 28,800 divided by 3 losses, and that's going to give us an average loss of 9,600. And so let me ask you this, folks. Is it okay that our average reward is lower than our average loss? Is that okay? Is that okay? And oftentimes I'll get responses like, yeah, it's fine, or no, that's not great. And I've had people say, hell no, that is absolutely terrible. And I got to say, how do we know that? How do we know that that's terrible? Right here, we're making 54 cents for every dollar that we're losing, is basically what this ratio means. We're making 54 cents for every dollar that we're losing. Mike says, nope, that's not good. Okay. Well, I got to say, we don't really know until we have tools like this. And this is why I don't know how people trade and trade successfully over long term without either having access to the Bloomberg terminal or having access to an analytics tool like what we've developed. Okay, if you have an 80% win rate and you have we'll just come over here and you've got a 0.54 reward to risk ratio, folks, I'm here to tell you that your results are generally going to be great over the long term. Yes, you're going to have retracements. Okay, what this tool does is it takes these metrics and it spits out a simulated performance over the course of 7 different outcomes. So it takes those metrics and over 200 trades, it's going to spit out a simulated performance of what your portfolio results would look like. And I'm not so much interested in what the balance of my portfolio is going to look like. What I'm interested in is the trajectory of my portfolio. I want to see all simulations heading higher. I want to see all simulations heading higher. Now, historically, 2016 wasn't our best year. We did 31% last year. Over the long run, our monthly income system has an 82% win rate and a 0.75 reward to risk ratio. Okay, we're right 80% of the time, and every time we're right, we're averaging about 75 cents in profit for every $1 that we risk when we are wrong. And folks, you're going to be absolutely successful if you can maintain something like that. And now it's your job to just maintain that. I don't care what you trade. I don't care how you trade. You've got to know these metrics. If you don't know these metrics, you shouldn't probably be investing. Okay? You're probably just gambling. And in the hedge fund or at a Goldman type area, you're going to get fired if you don't know these things, if you're not keeping track of these metrics. So I'm here to tell you that most of us lose money because we're not tracking the basic things that the professionals are. Okay? So the first 2 things that need to be included in your trading plan is number 1, your win rate, number 2, your reward to risk ratio. Okay? The third thing that needs to be included in your trading plan is position sizing. Folks, this is so critical. I'll ask people, how much are you willing to risk? And oftentimes I hear, other people say, don't risk more than what you're willing to lose, or only risk 3 to 5% per trade. And I think that those are industry answers that we've all just been told. But if you go and you walk into a bank, I promise you that a bank is going to have an answer to that question. How much can they risk on any given loan? They have a set algorithm that specifies that. And this is such an important piece that most of us miss. No, you shouldn't risk more than what you're willing to lose. Yes, trading and investing involves risk, but you have to define this number. And until you have tools like this analytics tool to help you visualize the effect of risk, say for example, if I risk 50% and I've got these metrics, it's just a matter of time before I find myself with drawdowns of over 50%. Okay, it's just not sustainable with those metrics. Again, this tool is so neat because you can press F9 over and over and over again, and it will rerun the simulation. And that's neat because, you know, I want to see if there's any discrepancies in my metrics. I know I'm risking way too much. If I'm risking 50% of my portfolio, you know, there are simulations here, even though I can't see them here because it's such a, you know, rapid movement higher. There are situations here where the results would be that I'm down 50%. Okay. Whereas if I'm over here and I'm only risking, say, you know, 1% on my portfolio, yeah, I'm getting really solid growth here, but it's very slow. I may be under investing. Okay. I may be under investing. And so I think this is important because, you know, if you underestimate your position sizing, you may be ending up with 10 times less than what you could have, your account could have amounted to. If you're over investing, you overestimate, you risk blowing up your account. And I know there are people here today that have done that. And so this tool hopefully will allow you to visualize the effect of how much you're risking per trade. Okay, and you'll be able to see that on paper. All right. So those are the three things that you need to be tracking in order to create a successful trading plan. Number one, you've got to define what your win rate's going to be. Number two, you've got to define what your reward to risk ratio is going to be. And number three, you've got to define what your position sizing is going to be per trade. And if you don't have that done, I gotta say you're just gambling. And I would get that done. And unfortunately, as retailers, we don't have tools like the Bloomberg Terminal. They cost too much, $50,000 a month. But this trade risk analytics tool is a really good start and will help you to start hopefully visualizing the effect of those three important metrics that almost nobody in the retail space is measuring. Almost nobody in the retail space is measuring. If I came in and did an audit on your trading, and I said, show me your win rate, 9 out of 10 people aren't going to be able to show me that. That's one area where you can walk away from this training this weekend and improve on it now. Okay, go and find out what your win rate is. Okay, if you don't know what your reward to risk ratio is, go find that out. Go find that out. Okay, and that's something that you are going to be able to do now. If you don't get anything out of today, you can go and do that. Okay, so creating a winning trading plan using these three metrics is the easiest way I know of to generate consistent income today. I don't care what you invest in. You're going to have people say low here and low there, come and do this or come and do that. Most want to sell you something, and that's okay. Okay, education is a really good thing. But I want you to remember that as an investor, you need to be interested in metrics. I don't care what kind of investing you choose to do. You need to start measuring your win rate, your reward to risk ratio, and your risk per trade. And anything that you look to do to follow other people, they need to be doing that as well. You need to ask them, if you're going to follow somebody, what's your win rate? What's your reward to risk ratio? And what's your risk per trade? And if they can't show you those things, then I'm afraid that it's probably not going to work out. So you need to do that. Go and do that today. Okay, I'll share with you a story. There's a guy in our system. His name's Rob. Rob, he works full-time in IT, and he was finding it difficult to sit around and watch trades all day. Okay, because he trades full-time. And Rob, he found the Super Trader and what we've developed here, and he found that he didn't have to sit around his computer. He didn't have to show up, right on the open for 2 hours a day. He could utilize the monthly income system to achieve really great returns. So he joined the Super Trader, and I just want to share with you what he did. So he joined us last August 17th, and here at the Super Trader, we do one-on-one mentoring. So our members, they can come in here, and literally at any time they can come in here, click on the one-on-one scheduler, and they just simply pick a time that's available. Okay, they can come in here, and they literally can go next Wednesday. There's a couple times, next Thursday, next Friday, and so on and so forth. Right. So there's always a time available, generally within a couple of of days. But Rob ended up getting in and joining, and literally on his very first day, he scheduled his first one-on-one mentoring session. Okay, Wednesday, 8/17. We took a screenshot of it, and then later on that day, he ended up opening up his first monthly income position, and he sent me a screenshot of it right there. He opened up literally about 15 minutes before the overall market closed. Okay, and within his first 8 days, the trade closed out for $650 in profits. It got better though. Okay, he ended up closing out, and I need to get an update to this, but he ended up closing out 3 additional monthly income trades within his first 3 months. Okay, his second trade closed out for $3,500 in profits. His third one closed out for $7,500, and his fourth one closed out for $15,000 in profits. And this was all within his first really 3 months of joining. He closed out $26,650 of profits within his first 3 months. Pretty neat. So we trade stock options, okay, or index options here at the Super Trader. And a lot of people, may not be familiar with options. So answer me this in the chat. What is your experience? Do you have any experience trading options? A, little. B, directional calls and puts. And C, you're familiar with spreads and adjustments. Answer me that in the chat. The thing is, it really doesn't matter what your options experience is. And again, folks, I don't care if you trade options. I don't care if you trade Forex. I don't care if you invest in real estate. I don't care. What I care about is you start measuring the metrics that leads to success. And if you can do that, I've done my job today. We specialize in options, and that's just what we do. It's not good for everybody, but what I found is options are great for consistent monthly income. They're great for long-term capital growth. You can structure, they're very dynamic, okay? Very, very dynamic instrument. And I don't have to be constantly placing a trade every single day. They're great as leverage to, have explosive returns, have rapid growth. I've found that they work well in all kinds of accounts. Some of the accounts they don't work in are 401ks, but you can do them in 401ks. And also for our friends north of the border in the RRSP accounts, okay? But in your Roths, your IRAs, your cash, margin accounts, you can trade options in any one of those accounts. They're really great for protecting stocks. So if you trade stocks, they're great for that. They work really well for trading stocks. They also can be less risky depending on how you use them. Most people are very, very risky with options, and so they get a bad rap. But they can have less risk depending on how you use them, and we prefer to use them in that less risky kind of way. Okay. AP says you have to have a stock account to trade options. Yeah, you can have a Roth account, you can have an IRA, you can have a cash, you can have a margin. It really doesn't matter. Any one of those accounts you can trade options in. And one of my favorites is that they can be used to make money in any direction. They're a very dynamic instrument. Okay, so again, I don't care what you trade, but options we found work really, really well for those that aren't wanting to sit around their computer every day. We generally swing trade them. Our average duration is between 2 weeks to a month in duration. Okay, so hopefully you're beginning to see how this is possible for you. Again, I don't care if the only thing you walk away from this is, I'm not here to teach you about options. It's what we do. I don't have time to do that. But if all you walk away from this is that you're going to go and find out what your win rate is and your reward to risk ratio and how much you're risking per trade, then we've won. We've won today. okay? Second thing that you need to do, first thing is you need to have a trading plan. Second thing you need to do is you need to follow your trading plan, okay? You've all heard of the scientific method, right? Ask a question, do your research, perform a hypothesis, experiment, do some analysis, and write your conclusion. Then you win the science fair, right? You guys all remember that. We've created what we call the scientific trading method, and we've come up with a little acronym. We call it TRADE, okay? I'm not going to spend a whole lot of time on this today, but step number D is really your only job as a trader or an investor. Once you're in a position, you cannot control what the market does, no matter how hard you pray to the stock market gods. It doesn't work, okay? Your only job is to defend your position. We call it our position management plan. And you have to start thinking in terms of a bank, folks. Think about a bank. You all in here, I'm sure at some point or another have taken a loan from a bank. The bank, that was an investment for them. They do that to make money, to get a return, right? Okay. A bank knows exactly when that investment hasn't worked out. They know exactly when their investment has gone bad, and they don't hesitate in executing their position management plan and defending their position. They will simply get out and they will seize the vehicle, or they will foreclose on your home, okay, or they will take you to collections on a credit card. They will defend their position. It's not emotional for them. They know exactly when to get out an investment when it's gone bad. And for you as well, you need to define that before you ever get into your position, because once you're in your position, it becomes quite emotional. So I want to share with you one of the trades that we do. So the way that the trade that we do works is that we want it to stay between a range. We don't really care if the market goes up or down. We simply want it to stay within a range. That's all that we want it to do, okay? And with that, so long as it does that, we're going to be profitable. Again, it doesn't matter where in that range it closes at, just stay within that range. Well, sometimes it doesn't. And what we do before we ever get into this position, we put together what our position management plan is. In this particular trade, we actually don't manage our profits. We just, we actually collect what's called a credit. Okay, for my friends in here that are new to options, don't get hung up on that. But at the end of the day, we're in this thing to make 75 cents per contract. One contract is the equivalent of 100 shares. Okay, and we are risking $4.25. So what is our reward to risk ratio, folks? If we're in this thing to make 75 cents and we're risking $4.25, that gives us a 0.17, we'll round it up even, a 0.18 reward to risk ratio. Now, this particular trade, about 90% of the time, it's going to stay within these ranges. And we know that just based on standard deviations. The market deviates to a certain extent that retraces to the mean. You've heard it today, there are patterns, and it's just basically a mean retracement constantly, okay? So 90% of the time, it's going to stay within these ranges. So we know that 90% of the time we're going to be right, and we're in it to make 75 cents. We're risking $4.25. That gives us a 0.18 reward to risk ratio. So let's plug that in here. If we're going to be right 90% of the time, and we have a 0.18 reward to risk ratio, how many of you want your portfolio looking like this? Not me. Not me. Unfortunately, this is what most portfolios will look like, because most trading systems, most trades in the stock market are designed to, not blow up your account, but there's no edge to trading, okay? There's no edge to trading, and you have to create that edge. And it's true in options as well. It's true in futures. It's true in everything, okay? You have to create that edge. So in our loss management plan, we define that edge. We're going to look to limit our losses to no more than 90 cents. No more than 90 cents. And even before we get into the trade, we actually defined where that would be. It's at the dashed red line or the dashed green line. That's about where we would have a 90-cent loss. Well, all of a sudden, what we've done is we've taken our risk from $4.25. We've said we're in it to make 75 cents, and we're willing to risk no more than 90 cents. So that brings our reward to risk ratio from 0.18 up to 0.83. That also decreases our win rate because we're going to get out earlier, right? We're going to get out before it gets up to the horizontal solid red line or the horizontal green line. Same thing with a bank, folks. A bank doesn't wait for you to burn your house down before they foreclose on it. Okay, they get out and they foreclose at the first signs that you're not going to be able to afford that payment anymore. Okay, and so they don't wait for everything to blow up on you. Same thing here. We don't wait for it to blow up on us before we get out, because then it's kind of too late. So now what we've done is by getting out early, we're going to reduce our win rate. Historically, it's been down to 82% since 2007, and we're going to bring our risk to reward ratio up from 0.18 to 0.83. And now you've got a profitable trading system. Who cares if one doesn't work out? It doesn't matter that you brought your win rate down a little bit. You're trying to balance out that win rate with your reward to risk ratio and your risk per trade. And that's what we're looking for. We're looking for a really smooth ascension here in all 7 simulations, all right? That's what we're looking for. And that's what you're going to get with that particular system. So as it would be, not all trades work out. You've got to defend your plan or your trades through position management plan. This trade didn't work out for us. We ended up getting out and taking a 70-cent loss, but through the adjustment process that we use, we were able to fix that trade and recouped all the losses and most of the profits. Okay, we were able to recoup all the losses and most of the profits. So, folks, options are absolutely phenomenal. Okay, I think, again, there's lots of ways to invest. I invest in real estate. I invest in small business. But I found that options are really great for consistent monthly income. Okay. Third secret, number one, the first secret was you've got to have a trading plan. Second one was you've got to follow your trading plan. And the third one was that you've got to have a co-pilot. Okay. Having a co-pilot is the best way I know of to have long-term success. So this was me when I was 16 years old on my first solo flight. I soloed in a little 152 Cessna, and this was my instructor. His name is Jim Stevens. He flew for the Air Force for 27 and a half years. He is now a flight instructor for the Air Force, and he's also a retired Air Force colonel. Okay, so one day, him and I, we were out, and we were flying, and we flew into this. Okay, I flew out of Atlanta, Georgia, and for those of you that are in the South, you know what the thunderstorms can look like. They roll up on you, and they are big. And we were flying right into, at the time, I was about 14 years old. I started flying when I was about 13. I got into it from scouts, and I was flying with Jim Stevens, my instructor, and I was 14. And I'd been flying for a little over a year, and I thought I knew what I was doing until I saw this big black wall. And I was absolutely petrified, folks. And I'm here to tell you today that if Jim Stevens, despite what I knew, fear would have overtaken me. And I can tell you, I would not be here today probably if it weren't for Jim Stevens getting through that storm. That was absolutely terrifying. We literally would drop 50 feet out of midair and go up 50 feet in midair. And it was just, turbulence was insane. But my point in that is that I knew somewhat of what I was doing. I was young, but I had been flying, and I had probably about 40 hours under my belt at the time. And but I got into a situation that was scary, and it was because of the checks and balances that you have in a cockpit in the airplane that got me out of a situation that I may not have been able to get out of myself. And so I would just encourage everybody here to identify somebody that can be a co-pilot to them, somebody that can be a co-pilot to them. And I think that you will have a lot of success if you can do that. I think you'll have a lot of success if you can identify somebody that can be a co-pilot that knows as much or more than you do, okay? As much or more than you do. So let's have a checkpoint. We're almost out of time here. Do you see how simple it is? Again, I don't care if you trade options. I don't care if you join our group. I don't care what you do. You've got to start identifying what your win rate is, what your reward to risk ratio is, and how much you're risking per trade. And you have to follow your trading plan. Once you've identified what those metrics are going to be, you've got to follow it. You've got to stick to it. You've got to see, okay, this is how we're doing. This is where we're doing well. This is where we're not doing so well. I need to bring my reward to risk ratio up. I need to have a little bit of a higher win rate. Okay, you've got to constantly check that. And that's how it is with flying. You're constantly checking that you're on course until you take off from LA and you land in Hong Kong on a dime, because systems in an aircraft have allowed you to do that. And that's the only way you're going to be successful as an investor. It's absolutely powerful, folks. Okay, I've skipped a lot. I want to share with you a story that we've got from one of our members. His name's Joseph. Joseph is a dentist. He sent me this email just a little while ago, and yeah, I won't read the entire email here, but his son's 6'2", or his son's 6'8", he's 6'2". He just makes everybody look short. But anyways, I got this email from Joseph, and in the email he attached his SuperTrader results, and he simply just follows exactly what we do. And you know, he says even in his email here, like most people, I was skeptical and cautious at first. He started trading in paper money, and then he slowly transitioned to his taxable account once he saw that he could follow the system and that it worked. Okay, and he said that it's a game changer for him. So again, a dentist. He's not a trader. He's not a mathematician. He's a dentist. And this is what his results were last year when he sent me these this little spreadsheet with his results. So January, his first $20,000 month. He started with around a $250,000 portfolio. February, $9,000. March, 18. April, he did $50,000 in income. May, 63,000. June, 47,000. July, 55,000. August, we had a bad trade. We had a trade that went against us. And through the adjustment process that we've developed, oftentimes our results are going to generally be better when we have to adjust trades. That's why 2008 was so great for us, because we had a pretty big drawdown, and we were able to, through the adjustment process, recover that and a lot more. So in August, in the adjustment period when we had to adjust a trade, he did $102,000 in income. Okay, I mean, absolutely incredible. Starting off with a $250,000 account. Okay, September, 68,000. October, 51,000. And I think he did end up sending me an email here. Let's see. Yeah, he did end up sending me an email here with the remainder of his results. Yeah, he did. So let me just black that out here. Everybody don't mind that. Please don't blow up his email. He's doing exactly what we're doing, but yeah, so he did 50,000 and 100,000 for the rest of the month. I didn't get those results from him, but he did end up sending me an email. But in November he did 50, and December he did 100. So absolutely incredible, folks. And that's a system that we've developed. Again, I haven't got into a lot of details. I haven't gotten into any details of how that works. We just don't have time. But let me recap. Number one, the first thing you need to do is you need to create a trading plan. Okay, we've created 3 systems here at the SuperTrader. We've taken a lot of the work out of it, and it took us about 2 years to develop each trading system. It's more than just defining what your win rate, your reward to risk ratio, and how much you're going to risk. You got to know, how are you going to achieve that win rate? How are you going to achieve that reward to risk ratio? We've developed 3 systems that have those things defined already. Again, it took us about 2 years to develop each one of them. Okay. Second secret, you need to follow your trading plan using that scientific trading method. Defend your position through your position management plan. And lastly, never trade without a co-pilot. Find somebody that is as good or better than you, and make sure that you put them in place to keep you accountable. In our community, we keep each other accountable. We have live chats. Everybody's in here throughout the day. They can come in here and chat throughout the day. We have live events every single day where people come in and do live training. We've got training courses. But I guess the bottom line is you've got to find somebody that can keep you accountable, whether it's us or somebody else, your spouse. They need to know as much or more than you, so that when you fly into that storm and you get fearful and abandon your plan. They're there to keep your feet to the fire so you execute your plan. So I hope you've enjoyed this, folks. This is how you can go ahead and get that trade and risk analytics tool. I told you, 100% free. This is all I got for you here. We obviously do have other things, but again, not the time or place to pitch that to you. If you're interested, feel free to reach out to us. But I will put in the chat the link to go and get that trade and risk analytics tool. Download that, folks. That's a tool that I think can be a game changer for you and will help you visualize the effects of those metrics that you need to be measuring. So I've put that in the chat. I think that it was put in the chat anyways. Renee can confirm that with us, and we'll go from there, folks. Reach out to us. Again, our site is thesupertrader.com. Don't forget the in front of it, thesupertrader.com. And there's contact forms on there. If you're interested in more, you're more than welcome to reach out to us. But that's all I got for you guys, folks. Nothing to buy here today, just a free analytics tool. Hope you enjoy it and hope you've enjoyed this presentation.